Hey everybody, welcome back to the channel. Today I want to go over the London Silver Bullet session for June 13th. It's from 3 a.m. to 4 a.m. Eastern Time. CPI comes out today, later today in the New York session when it starts. Just want to show you what you could have seen here. First I'm going to show you a trade that I would have taken if I was up at the time, and then I'll show you one that I would not have taken, but some people could have taken it. So I'm going to show you two trades today. This dark gray area is the Silver Bullet session. That's 3 a.m. over here and 4 a.m. over here. So the first thing we see is we see a short-term low being taken out right there. We see another short-term low being cleared right there. And then we see this long one over here. That's where the sell side liquidity has been taken. Okay, we're actually at even right here. Right here where we've made relatively equal lows. So at this point when we're over here, we should be leery of that, waiting for price to come back through there. This would be the high, the swing high that was the catalyst that took out the swing low over here. So I'm looking for a market structure shift of this high right here. We get that. So then once that gets traded through, you're looking back. Do you see any inefficiencies? I mean, besides this one here, but when it cleared this, it was already past that. Do you see any? Because I don't see anything. Okay. So then we come down, price comes up, and what do we have here? We have a volume imbalance. That is traded just like a fair value gap, and so we can get in on that trade. Price creates it, leaves it, comes back in, comes right through it, and then leaves it again. So that's where you'd enter your trade. You can get in there. You'd set your stop below the first candle of, which let's just say that's a fair value gap. It's not, but you treat it like it is. So we go into the first candle, one tick below, and that's where we're at. It's 1 1/4 handles. You'll be aiming for 5 up here. Obviously we don't get it, right? Now we do get 2 to 1 for sure. We get 2 to 1 right there. So at 2 to 1, I'm taking my partials at that point. Even if you went 60%, you're still getting partials. So on this one, you would have taken a partial and you would have broke even. Your target obviously was here. It doesn't get you 5 handles. So you traded through and you moved your stop to break even, and you took partials, right about here. And you got out. So you got out on this candle here, break even. So you got paid for some of your time there, but you didn't hit your target. Now where we're at right now is this whole range right here is in the middle of a daily fair value gap on the higher time frame from a long time ago. So you're kind of looking to take out this high, and then you got to wait for price action to show you where it's going, where it's heading to. You can go to the top of the fair value gap. So right here, you just aim for your 5, and that was it. So does it really meet all the rules of the Silver Bullet? No, it doesn't. Now let me show you what a trade that you could have taken. It still doesn't reach for, you can't see a 10 handle target, so it still doesn't qualify for the Silver Bullet framework that ICT gave us. But let me show you what else you could have seen. Well, you could have seen price came through here, created a swing high, came back through, and traded through it. So you could have seen this as a short-term high being cleared. Well, wait a minute, isn't that a market structure shift? No, because this blue candle here didn't take out a swing low. It's not the lowest one. So this is just a short-term high. This is a market structure shift because this swing high was a catalyst that took out a swing low and is the lowest point. So that's your market structure shift. This is merely a short-term high. But as I've shown you, as not a market structure shift, but it is a short-term high being taken. So you could, as you trade it through, does it leave a fair value gap? It does. It leaves a fair value gap right there. What else do I see? I also see an order block right here. So if price comes back in this range, you can take a trade. I would not have, in all fairness, if I would have saw this play out, I would not have taken this right here. I would have taken this trade and it would have broke me even. I would have been perfectly fine with that. I would have taken my partial and gotten taken out. That's fine. this trade I would not have taken. But you could have seen it a different way. You could have seen this price action this way. Could have entered there, and you could have put your stop below the low, one tick below the low, entered right at the top of the fair value gap, and you would have got your 5 handles, and you could have cleared the trade. So those are your 2 trades. Again, the one that worked out, that ended up working out, is the one I wouldn't have traded. I personally like the market structure shift better than the short-term high. In fairness, I have taken these trades before. Sometimes they work out, for me, sometimes they don't. So I will show them to you, but I don't usually take them. I prefer the market structure shift. Again, a volume imbalance isn't my favorite entrance point either. I prefer a fair value gap, but I will take a volume imbalance. So this is the trade I would have taken if I was trading this session. This is the one I would have taken. But those are your 2 potential silver bullet trade setups during the 3 to 4 a.m. silver bullet hour on June 13th, before CPI.